All right, something that I recently sort of just clicked for me, and I think it's important for us to understand this. And if you've ever been wondering why all of these Bitcoin treasury companies that keep getting launched are like blowing up to 6, 7, 8, 9 times their the value of their Bitcoin, their quote unquote MNAV. Well, I wanna just talk quickly about why that might be happening and why I don't know if it's going to stop in the next, few years. Ultimately, I want to make sure that everyone understands that the beauty of Bitcoin is unlike, as I said in my last video again, which is why you need to subscribe to the channel if you haven't already. The beauty of Bitcoin is that you don't have to work out who the winner is going to be. I want to make that very, very clear. You do not have to sit here and analyze, MicroStrategy or MSTR. You do not need to sit here and analyze MetaPlanet. You do not need to sit here and analyze Smarter Web Company. You do not need to sit here and analyze H100. You do not need to sit here and analyze, Nakamoto. You do not need to do this. The reason what's so beautiful about Bitcoin, which is one of the things I loved right from the beginning, is that as all of these companies get their, capital, et cetera, they're buying Bitcoin. So you are the benefactor if you just hold the underlying asset. And that's unlike any other industry out there, right? You can't just own a piece of AI. You have to find the winner. You cannot just own a piece of mobile apps. You have to find the winner, the distributor, the provider, the company that actually gets the access. All value is concentrated into the company. Whereas with Bitcoin, you do not need to do that. You can just hold the Bitcoin and the value will accrue down to you based on you holding the asset. And this is where I see a lot, and I find it frustrating as well when I see a lot of people talk about, oh, I'm selling my Bitcoin to jump into this, to jump into that because it's outperforming Bitcoin. You don't understand. Yes, you may get a short-term trade. You may get a short-term opportunity to get a lift on the value of your US dollars. But if your baseline is Bitcoin, the first thing you're doing is selling down your Bitcoin and converting it into something else at a seventh of your Bitcoin, right? So it now needs to go up 7x just to start making up the value of that Bitcoin. Now, some stuff may do that, right? Some things may do that, but then a lot of people get, FOMO, and they start wondering, why am I not doing this? You do not need to do any of this, right? I want to make that very, very clear. Now, one of the unique things about capital markets is that, and again, this is a bias, even though I'm from Europe, all of my life has been focused on American capital markets. So all of my asset structures, all of my wealth structures, everything is sort of focused and primed towards American capital markets. So, one of the things that I've recently learned and become very interested in, and certainly getting my ChatGPT head analyst to look at very deeply, is the tax incentives. Because tax incentives, by the way, one of the reasons why I started thinking about this was I started thinking about real estate. And real estate is completely engineered. I'm gonna do a video on this, so subscribe to the channel. But real estate is a completely engineered asset class. And so I started thinking about the tax incentives for that. And I started wondering, like, okay, what about the tax incentives for all these other countries? Why is real estate the way it is in the US and the UK? Why isn't it the way it is in other jurisdictions? And you realize it is because it's been completely engineered to do that. And then a friend of mine, Jimmy, mentioned the tax advantage structures of these countries where there are where there's basically these Bitcoin treasury companies that are trading at 6, 7, 8x of their underlying Bitcoin. You start thinking about that. And what I realized, and I think, again, this should just be interesting to you unless you want to get in the weeds of trading. I'm not doing that, right? But what's interesting is, like, for example, there are countries where there are wealth taxes, right? And that might seem unbelievable to a US or a British investor, but there are countries like Norway, like the Nordic countries, where there are wealth taxes. And when you go and study into those wealth taxes and what is applicable to those wealth taxes, what you realize is that if you have Bitcoin, you are going to be subject to wealth taxes, right? And those wealth taxes will happen on a yearly basis, whether you sell, whether you don't sell, it doesn't matter. You're gonna have to liquidate in order to do that. Now, and then you look at, okay, well, those wealth taxes are applicable to Bitcoin, but now what are the terms of a retirement wrapper, right? Like a SIP in the UK or a 401k, Roth IRA, a self-directed investment fund for yourself that you can set up for retirement. And what you realize is that there's no wealth taxes on those. So capital is incentivized to force itself into these long-term wealth wrappers. And the reason for that is because it crashes the velocity of the amount of money that's being printed, which increases capacity for the amount of dollars that can be printed. So if velocity goes down, then you can print more dollars and you create more capacity because it doesn't lead to the inflation. So that's a whole other conversation. But these countries are saying that if you invest through one of these long-term retirement wrappers, you do not have to pay those wealth taxes. You are not subject to a series of taxes because you are investing, quote unquote, in the long term. Well, then you've got to ask the natural question, which is can you put Bitcoin into those wrappers in those countries? Like in the US, you can put Bitcoin into a retirement wrapper. It's a pain in the ass, but you can do it, right? In Europe, you cannot, right? You cannot do this. You cannot just put spot Bitcoin into some of these wrappers. What you can do is hold equities and then you're not taxed. So now you look at all of the incentives of the issues of Bitcoin cold storage and custody, right? You look at the issues of taxation and a wealth tax and people are diluting their wealth. And then you go, of course they're gonna bum rush a trade where there is no capital gains tax, there is no wealth tax, there is nothing to pay because it is inside of this retirement wrapper. And the only thing that you can put into that retirement wrapper is an equity. So now you start seeing why these companies are generating this multiple on the NAV, because it's irrelevant. These countries, especially Europe's been in stagnation for 15 to 20 years. There's no growth in European markets. Everyone in Europe is trying to invest in American markets. Those American markets, have been hamstrung because there's MiFID rules and everything else, capital controls inside the EU. And you go, okay, well, of course they're going to crowd the trade, right? They're going to crowd the trade because a little bit of growth with no taxation is better than nothing. So the desperation of that stagnant, locked up, frozen capital that's looking for growth is going to find those vehicles, and the advisors will advise their clients to put into those vehicles. And as they get bigger, it will stay like that. And I wonder how long this will last. I think it could last a long time because EU taxation law is not going to change. So this is something that I've been looking at, and I think it's quite important to understand that this is a reason why these companies are seeing these quote unquote explosive growths. Now, can it sustain? I don't know. Right? I don't know whether you can sustain these insane levels. What I do know is that taxation law takes a long time to change. And that could cause an opportunity where you can actually sustain these high multiples to the underlying asset because people just got to crowd the trade, right? It also explains why in the US, the MNAV of MSTR is a little bit suppressed compared to all of these other ones, because these are artificially incentivized to rocket, right? Because you have to crowd the trade. Whereas in the US, you can put IBIT, you can put all of these things into your retirement account. You can hold Bitcoin in your retirement account. So therefore, MSTR may have a much more consistent, much more stable, but in the short term, a much suppressed lower MNAV than these other European ones. I would love for someone to discount what I'm saying here. Now, I believe over the long term, MSTR is going to be the prevailing winner, which is why I'll never sell my MSTR shares. But in the short term, I was trying to understand, like, how do these companies launch out of nowhere, have 25 Bitcoin, 30 Bitcoin, 100 Bitcoin, 200 Bitcoin on the balance sheet, and they're worth $1 billion? Like, how does that make sense? Well, it makes sense because just like every other asset, the tax spread on the taxation is being utilized here to crowd these trades, just like happened with real estate. And that's another video that I want to do coming up, so subscribe to the channel. But this is my thinking as to why some of these companies like MetaPlanet, SWC, H100 in the Nordics, and basically like majority of these are actually justifying these multiples above the underlying Bitcoin. And it's because of the tax incentives in those countries that is forcing capital to crowd those trades versus just holding Bitcoin, right? Or having access to a Bitcoin ETF, or et cetera, et cetera. So think about this. Let me know what you think. I'm happy to look at, you know, alternatives as to why what I'm saying may not be true. But this is, you know, if this is the case, if this is what's happening, then we could be sitting here looking at explosive MNAVs in countries for Bitcoin treasury companies for a very long time, because those taxation rules are not going to change for a very long time. It takes Europe a long time to catch up. So again, that's thinking. But remember, you do not have to partake in any of this, because all of that MNAV expansion that's going over there will eventually accrete to the Bitcoin, which you hold, right? Or maybe you hold. The goal is the underlying asset, and all of these fiat games will be played on top of it. But this is a very important reason to understand the crux and of the market, right? So again, it's really something that I've started to focus on a little bit. And ultimately, the benefactor of this is going to be Bitcoin, which is why that has to be the underlying macro holding. You know, from my perspective, it's the overwhelming holding. It's, you know, less and less in cold storage, more and more in ETFs and things like that. But the crux is the Bitcoin, because that will be the end benefactor of all of these games that everyone wants to play. By the way, there will be, you know, pivots, right? There will be moments where if you're holding some of these things and the rules change before you know it, if you're not up to date on those rules, you will see people escape one of the trades and go into another one, right? So there's that element to it too. These are small market cap companies, and it's extremely dangerous to try and time these things. But it's important to understand, so you can understand why the underlying Bitcoin is the main benefactor of all of this activity that's going on in the world, and why somebody like Nakamoto, whose job it is, you know, or stated intention is to go and find these strategic opportunities and launch these companies and build an ecosystem around taking advantage of tax structures, laws, regulations, et cetera, to flood capital into Bitcoin treasury companies, and why it may last a lot longer than what people think. But ultimately, there's always only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.